Hey harvesters, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over the trades I executed for May 13th. There was quite a bit of them. I started getting a little bit wild. I invested into IWM. I continued doing my normal cash secured and covered calls on SPY. So I'll talk about them more in detail once we head over the spreadsheets. But the whole point of this channel and this account is to generate a daily, weekly, monthly, and yearly income. And I'm usually doing that through safe investments like covered calls and cash secured puts. If you guys are interested in making this kind of money, follow my channel, follow my journey, and see if this is actually successful or not. I used to be invested into high income ETFs, but then came to the realization I could probably just run safer options trading myself, and I don't have to deal with NAV erosion. So this is the result. I had about 22 trading days, and then I'm going to go over the holistic 22 days, if we're making money, if we're losing money, what the week over week looks like, the month over month, and then what the yearly progress has been thus far. You guys know me. For the returning subscribers, the first thing I like to talk about is my account value. And that's more so just to be transparent, to show you guys, hey, I'm an actual investor. I'm in the trenches with you guys. Some YouTubers, their whole entire channel is about giving educational information instead of like, hey, can actually be done. They just come up with theoreticals and do clickbait stuff. I'm doing it in the field, making money. Come join me. With that being said, account is currently at that $95,523.01. It's funny that once I sold out of my high income ETFs, the market started going up. So maybe I was the one that changed it all. Just kidding. All right, let's go over the spreadsheets and talk about the tactical level options I ran and explain them. All right, guys, now that we are at the spreadsheet, I'm just going to give a quick overview of all the actions I took, just a theme to kind of visualize what I did, and then I'll get into the nitty-gritty details of strike prices, what price the SPY was trading at when I ran these specific options. So let's get into it. I did a few things. I did my normal SPY covered call and cash secured put on the 100 shares of SPY. So that would have netted me about about $92 from that. But then I'm like, man, $92 didn't seem like a lot of money. So I wanted to be a little bit more creative. So then what did I do? I then bought 100 shares of IWM, and then I sold at the money covered calls. So that was like my second phase. And then as the trading day progressed, my cash secured put that I ran on the SPY was super far out of the money. So then I decided to buy it back and then choose a strike price that was a little bit closer to at the money, so I can squeeze out just a little bit more premium. However, at the end of the trading day, these shares were assigned. So tomorrow I'm actually starting the trading day with 200 shares of SPY and then 100 shares of IWM. And then now let's talk about the individual details of each trade. The first thing I did for the day was ran a SPY cash secured put. If you guys are not familiar with cash secured puts, what it is an investor paid you an upfront premium to then offload their shares if the market trends in a downward trajectory. The only thing that you need to bring as an investor to the table for this transaction is collateral, so that when if the shares get assigned, you'd have the money to then buy the 100 shares of that investor that paid you that premium. But so let's get into it. So I made about $66 off of that cash secured put. I chose a strike price of 583. So the way a cash secured put works is when the SPY opened at the 586.19, the market would have to go down below 583 or lower before the cash secured put would get assigned. However, that didn't happen, and then I actually bought it back later that day. So I'll explain it in more detail in a second. The amount of premium I made was about $66. So nothing to write home about. Usually I make about 100 to 150. So today was a little bit lighter. Let's talk about the covered call. So for my SPY covered call, to run a covered call, you need 100 shares of an underlying. 100 shares is one options contract. And for me to own 100 shares of SPY, I needed about $55,962 to own those 100 shares. For today, I made $26 of premium. When the market opened was at that 586.19, and I chose a strike price of 589. I chose a pretty good strike price. And for when it comes to my SPY shares, I'm trying to capture as much appreciation as possible because I definitely still want to actually invest. Of course, I want to make a premium, and most of this account and this channel is for premium generation. However, I do want to catch some of the upside, especially because of how far the market went down and the whole rebound. So I wanted to capture as much rebound as possible. And once the market hits like homeostasis, the nominal trading level, where it's trading between like, 0.5% to 1% a day, I'd be able to then, once the market gets back to like that level of normalcy and there isn't massive swings anymore, then I can choose strike prices a little bit closer. But as of right now, I want to capture some of the upside so I can lock in some of the lost gains from, the previous month. I only made about $26. At the end of the day, this option was not assigned, and that's a good thing. I don't want this 100 shares of SPY to be assigned just yet. Once I get further down the line, I'm going to be more aggressive. The third thing I ran today as the market progressed is I actually bought back this first cash secured put for about $8. So I lost $8. I had to pay $8 back to the investor that paid me so that I can, null it out. And then so I could run another cash secured put. And then what did I do? Then I ran a cash secured put at the 587 strike price. When I ran this cash secured put, the SPY was at the 588.21. I think there's about an hour or 2 hours left in trading. So I'm like, we'll gamble it to squeeze out another $41 of premium. With that gamble, the market closed today at the 586.84. So then I got 100 shares of SPY assigned at the end of the trading day. So tomorrow I'm going to start the trading day with 200 shares of SPY and then 100 shares of IWM. We'll get to IWM in a second here. But the first 100 shares that were kind of like the original OG shares, I'm going to continue doing my making sure I capture appreciation and then have a little bit of premium. But the shares that recently got assigned during this cash secured put, I have a little bit on margin. So what the plan is I'm going to just sell it at the money first thing in the morning, rack in as much premium, and then try to offload these shares so that I can get rid of my margin. That's kind of the thought process there. Also for NVIDIA, I bought back the cash secured put that I ran on Monday. It only cost me $14, and I already made $128 off of that cash secured put. So I netted $114. I didn't want fluctuations in the market or some random downward trends to then that the shares would get assigned. So just wanted to close it out. I already made good money off of it. Don't need to hold that option any longer. For IWM, when I started trading this morning, I have about $30,000 of cash after my 100 shares of SPY running cash secured puts. So then I decided, hey, maybe, and then between my NVIDIA as well. So I had about $20,000 left over. So I'm like, you know what? Let me try and jumping into the short cap for the Russell 2000. So what did I do? I bought 100 shares of IWM, about $208.51 a share. So I needed about a $20,851 investment. So what I do, I chose an at the money covered call. So I made about $52. The strike price I chose was 209. I bought in at 208.51. And then were my shares assigned? No, even though they were at the money, they weren't assigned. And my whole plan was to hopefully get them assigned. But it is what it is. I basically made $163 of total premium today. If I did what I normally do, just running my 100 shares of covered call income from SPY and my my cash secured put on SPY, I would have only made it $92. But because I wanted to be a little bit more greedy and a little bit more creative, I then was able to knock out, another, my math is terrible, $70. I was able to squeeze out another $70 for the day. And then $70 doesn't seem like a lot of money for one transaction, but if you do over a year period, that's a significant amount of money. But yeah, guys, a lot of trading, a lot of, wheeling and dealing, but end of the day, $163 in the pocket, able to buy more shares of SPY so that I can rinse and repeat and then find our way to financial independence, financial freedom. Let's go over to the holistic view of the last 22 trading days. We're going to talk about how this trading has been going daily, weekly, monthly, and then yearly. We've only been doing it for about 22 trading days. So the yearly isn't as fun to look at right now, but 6 months from now, it might be cooler. So let's go take a look. Let's go over the holistic view of the last 22 trading days of me executing these very safe and simple options trading. So for May 13th, we already talked about it, made that $163, definitely an improvement. I usually like to get somewhere in the 3-digit club, somewhere between $100 and above. Ideally, one day, once we have bigger accounts, all of us, that we're going to be in the 4-digit club where we're making thousands of dollars a day. But we need to start somewhere, and this is that start. And it will be interesting to see how this project and how this channel grows over time with this account, just running this specific strategy. But then at the end of the trading day, account was at that $95,302.93. Of the last 22 trading days, I made about $4,163.53. And if you look at that as a percentage between adding the premium and then just the appreciation, starting from this $86,312.66 all the way down to this May 13th number, we're actually positive 10.42%, which is quite nice. And we've done 22 trading days. usually in a month, there's somewhere between 20 to 22 days. So we've fully established at least 1 month of options trading with this strategy, and that's about $4,163, which is quite nice. No NAV erosion. All this money is straight cash. It's not being pulled from the share price to pay you back. There's no waiting for the recovery of the dividend or the ex-dividend or distribution. So I definitely like this strategy a little bit more than high income ETFs. So if you are on the fence of doing it, give it a shot. Start with a stock that you are very familiar with, or an ETF you're familiar with. Start wheeling and dealing some options. Once you realize how easy it is, you are not even going to look back, not even going to hesitate. And if you find a ETF or stock that runs daily, you can run this every single day. People wanted a daily options income. Here it is. But let's continue forward. The trade win percentage I have been at is at 95.45%. I had 21 winning days, 1 losing day, and then, as we mentioned earlier, 22 total days of trading. The average premium that I make per day is about $189.25. And then I had to update the average weekly premium metric a little bit. So it was a little bit down from yesterday. And my average weekly premium is about $832.71. If you look at the average monthly premium, I'm just keeping it very blanket at that 20 trading days level. So we're at that $3,717.53. Yearly premium, we're not there yet. We will be 8 months from now. But as for me, I always like to come up with just a little bit of an estimate to kind of get an idea of what potential numbers will look like. And from taking this monthly premium and just multiplying by 12, theoretically, if everything stays the same, obviously the market might not be as bullish since when I started. So the premium might be lower, the appreciation might be lower, and the difference might be, it might not be 100% exact. But with that being said, right, it's always nice to kind of plan for the future. And it's always good to have an idea of what the future might look like. Going into something blindly, not coming up with estimates, you're doing yourself a disservice because you don't actually know how something will perform if you don't like test some of the data. Either way, or that's why I'm here. I'll do it for you. But the average estimated yearly premium is going to be about $44,610.36. Guys, this is like having like your own like average American salary. You have like it's like a robot working for you and then making a little bit of extra money. And if we look at that as a average yearly percentage, that's up 52%. Never has the S&P 500 ever gone above 52%. Yes, this is too early to tell. I mean, as of right now, these numbers look quite exciting, and we'll see how this performs over the long term. But for 2025, we only have 8 months left, and the number is going to be closer to about $29,740 of what I'll actually make this year. Cool. Let's look at the weekly tracker. Let's see. How do I want to talk about this? So for the weekly tracker, week 1 made money, week 2 made money, week 3 we had that April 22nd butchery of rolling options and not doing them correctly. But then we won a couple of days after that, so that $1,700 loss was only a $740 loss. But then the next 2 weeks after that was in the positive, and then we are currently on week 6, where after 2 trading days, we're already at $546. Man, if we can keep this momentum going and try to get to that 1,000, that 4-digit club, that'd be sick. That'd be awesome. And then looking at the monthly tracker for April, we made about $2,289.53. For May, we are closing in fast to April as we are getting more mature with these options trading and getting more familiar and understanding the market a little bit better. So we are at $1,874, and the yearly tracker is the number we already discussed at that $4,163.53. Guys, I'm loving this. It's giving me something to do. It's keeping me engaged in the market, and it's making me stay on top of the investing news. So I definitely liking this strategy. Let me know what you guys think in the comment section. Now let's go over to Robinhood and then talk about what I plan on doing for tomorrow and actually kind of walk through and talk through some of these trades, how to execute them, and then let's get that ball rolling. Let's go over and start off with looking at SPY options. So for SPY to run options, you go over this trade SPY options, this money printer. Every time you click it, money shows up your account. It's quite fantastic. Okay, going over to the SPY, don't ever press this buy button. That means you as an investor have to pay the out of pocket premium for the shares. I just recommend doing covered calls and cash secured puts. That's just sell, call, and then sell, put. And usually I like to run dailies on the SPY. But let's look at sell call first and look at where the market is trading at the moment. SPY is at 587.41. And for my first 100 shares, the ones that were not assigned from the cash secured put, the one I'm trying to capture appreciation, I usually start with about a $5 away from the at the money price. We just talked about it. So that's going to be about the 592 and see where we're at. So this $35 premium, I think, is a decent one to capture a bunch of upside in addition to making some sort of premium. Not a lot of money, but $35 is better than $0, but then you're also capturing the upside. So ideally for tomorrow, I'm probably going to do something like that. And there's kind of two different outcomes of how this covered call works. So to run a covered call, you need to own 100 shares of the underlying. 100 shares is one contract. And then for one contract of this buy, I'm going to get $35 if I choose this 592 strike price. And so this is how it works. SPY trading at the 587.43. Investors are going to pay you that upfront premium. So they're going to pay that $35. If the SPY never goes at or above 592, they keep that upfront premium that you received. The shares were not assigned away from you. So you get to keep your 100 shares and you rinse and repeat. The other thing that can happen is say that the SPY is trading very bullish and it blows past this 592 strike price that you selected. So you still got that upfront premium of $35, but then you're going to have to sell the shares at this 592, even though if like say it blows to like the 595. So basically you would have to sell your SPY shares at this 592. You got the upfront premium, but the only downside of this strategy is you missed potential gain up to this 595. So you basically would have lost, you wouldn't lost, but you lost the potential ability to make $300 more of upside. So for every $1 the SPY goes up, that's $100 of appreciation. So 592 to 595, that's $300. It just depends on what your strategy is. But now let's go talk about the cash secured put. For the cash secured put, I don't think I have enough buying power available now that 100 shares of my 100 shares of SPY were assigned, and then I also have the IWM. So I'll talk about this as if I'm going to do it, but I don't think I have the buying power available. So we'll see. But let's start with the 587.30, do $5 below this price. So let's look at 582. For this 582, that's a reasonable price for me to run a cash secured put. So I would select that. And the way a cash secured put works is investors are going to pay you that upfront premium to then offload their shares if it goes below this at or below this strike price. The only thing you as an investor need to do is bring collateral that's either margin or cash. So for this 582 strike price, you need about $58,200 of collateral to run this specific option. So investor pays you that $71 of upfront premium. And let's talk about the two scenarios. First scenario, SPY trades at the 587.30, never gets anywhere near this 582. You get that upfront premium. You get to rinse and repeat. The collateral at the end of the trading day gets back to you so that the next trading day you can use it again to then run the same cash secured put. The other thing that can happen is the SPY blows way past that 582 strike price you chose. And let's say it's at the 580. So you basically lost. So basically you got the shares assigned at the 582. So you bought shares at the 582 strike price. And then that's not necessarily a bad thing. So if you get them assigned, great. You can just sell at the money covered calls to get rid of them or sell them if you're within profit. But if you're not profit and say they go below to like the 580, basically lost $200 of appreciation, and then choosing premium from that point on so you don't lose money might be a little bit less. So you might have to hold on to them a little bit for this 580 to recover back up to the 582 to then make a little bit more money off the premium. So that's just some food for thought. Let's head over to IWM and then kind of discuss. Wait, no, let's discuss the 100 shares of SPY, what I'm going to do at the money. So then for my second set of 100 shares of SPY that I got assigned from the cash secured put, I got them assigned at the 587 even. So I'm choosing this 588 strike price, choosing this $147, locking it in, and then sending it and just want to hope, and hopefully they can get assigned by the end of the trading day. And then the same concept applies for IWM. So let's go over there. Yep. And then I bought IWM at $208.51 a share. So I'll probably choose the 209 strike price and then lock in $83 of premium at the money in the hopes of me getting these shares assigned. They get assigned, I then buy back in tomorrow, and then rinse and repeat, selling at the money, trying to produce as much premium as possible. So yeah, guys, that wraps up the video. Let me know if you have any comments about what I said. Maybe if there's some way I can better articulate a specific strategy, please let me know. I definitely think IWM is a good choice for investors that don't have $58,000 of like money like me in an account. I definitely would recommend choosing a fund that is a well-versed fund that can be traded daily. So IWM, QQQ, SPY, they're great funds to invest in. But that's even $20,000 in account for someone that's starting might be a lot of money. So even just choosing like a winner stock like an nvdy, an Amazon, or whatever you think, whatever stock you think is going to be winner, but just you're very familiar with it. You understand the ins and outs. You understand the trading tendencies, what certain earnings look like. So you're still investing by doing this strategy. You're still choosing winners, but you're also trying to squeeze out money from these winners as well. So yeah, guys, that's kind of the thought process of what I'm going to be doing for tomorrow. Everything I said could play out exactly like I said it, but it's also the market and might just do exactly the opposite of what is happening right now. It might start going to a bearish trend, and then all the premiums I'm trying to pick are going to start getting less and less, and then I'm going to have to bag hold for a little bit until the market recovers. So nobody knows what's going to happen, but I also am a firm believer, don't force success in the market. Just take what the market gives you. The more you try to force something, the more you try to make more money, the more you try to like manipulate things, the more you're going to get caught with your pants down, and then going to have to deal with the consequences later. So just take what the market gives you, be very chill with it, and then let's rack in that premium and then continue the strategy moving forward. That's the video, guys. Hope you're doing well out there. Hope these accounts are growing. Hope this is giving you confidence, and I will see you at the next video. Matt out.